Hello again and welcome back. Thanks for watching. Happy Canada Day. It is Canada Day when I'm recording this video, so it is truly a happy Canada Day to you. So before I get into some preliminary stats for June, I want to talk about rental properties and what I've seen. This is not new to me. I see it all the time when I'm walking around, walking the dog and whatnot. And I can always pick out which properties are rental properties. And of course, I know which ones are too in my neighborhood because I have access to the sales history and just I know what's going on, right? Generally speaking, and I put this out on X last week, rental properties are not maintained as well as owner occupied properties. Now, there are some rental owners that take immaculate care of their properties, and I give you credit for that, and many good landlords out there. But lately, with the increase in rental properties, I've seen a lot more lax owners that don't take care of them. And maybe they just can't afford to take care of them or wasn't in their plan when they were speculating and whatnot. I don't know. But again, generally, they don't take good care. And a lot of them just let them go to crap. Like they're just terrible. So this week, I was showing 4 properties to one of you subscribers. So you may be watching, you know who you are. And the first property was priced low, so we didn't expect much. And of course, it needed work and all the rest of that. The second property was priced at market value. It was market rent. They were asking just over 2,100. And we go there and the place is trash. Like the floor is a disgrace, needs to be replaced. There's like leaks that had bubbled up on the floor, that swelled the floor up. Cat pee, the smell of cat pee was so potent, it was insane. The wife didn't even want to come in the house actually because it was so bad. So anyway, we move on to the next property, the third property. It was so-so, not that great. Outside looked kind of shabby, but again, they were asking 23 or $2,400 for this house, and it was a 3 bedroom. So we go in again, so-so, nothing special, needs a good cleaning, but it smells like wet dog in there. Like just, you're gonna have to air the place out, steam clean the carpets and whatnot. But these owners are showing these properties like this. They're nowhere to be seen. I don't know who they are, but they list them with their agent and they show them and they just show terrible. So then the last one we go to, it's in a nice part of town, and we go there, and I was kind of excited to see it because there was already 2 applications, and it just came on the market. So we walk in, and it was nice. It was like a character home, and again, it smells like cat pee. Not as bad as the first one, but you could still smell it. So again, you got all these properties out there that the owners are just not maintaining. They think, well, it's just a rental, right? Or like the tenants don't care. Let me just tell you, tenants do care, and you're going to get bad tenants if you don't have a house that presents well. So I've thought about this over the last couple of days, and I came up with the reasoning for why we were at this point. Well, we know why. It was speculation. These owners are not real landlords. They're just investors or speculators that just thought they'd make a quick buck. They never planned on maintaining these and offering a quality product to the market. Because when you're a landlord, you're technically a business owner. You have to offer a quality product. Not you don't want to be a slumlord. So essentially, what these owners have done, these speculators, because these again are not real investors, they've taken these properties, bought them, speculated on them, chopped them up in many cases to make multiple units, let them get run down, have not maintained them, and now they're trying to rent them back at what you would have been paying for a mortgage, which is insane. So again, it's just a sign of the times. This is where we're at in the market. The products are going downhill quick. And again, I just don't think owners can maintain these properties. That's what I think it is. It's not in their budget. Cash flow's tight, and they didn't plan on it, right? These are not big investors that bought apartment buildings and had them, penciled in for what they have to spend on maintenance. These are just quasi speculators that let these properties fall apart and actually ruin our neighborhoods. And they're an eyesore in many neighborhoods. So now I'm going to move on to some early stats for June. Now, this is just for the Itso area. These are the 15 boards. It used to be the 20 boards, but things are shifting around with real estate boards in Ontario right now. A lot of them are joining other boards or joining their computer systems. My board is going to be changing. Here they are on the map here, the green ones, and you can see who they are there: Barrie, Brantford, Guelph, Huron, Kingston, all the rest. And I'm telling you this because we are going to see some changes in the data. It's going to be confusing for me. I'm going to have to see how to approach it because I've always gone with boards and now we're joining systems. So the data is going to change. So it's going to be very interesting. But for now, it still remains the same. Here's the boards that will be joining the new Prop TX. And the Prop TX is some blockchain based information system for realtors, or an MLS system, I think it is. And yeah, here's the new boards that are leaving ITSO and have joined or joining Prop TX. And we have Kingston, Ottawa, NAR, which is the Niagara Association of Realtors, and the London St. Thomas boards. So this data is consistent with those 15 boards that I just mentioned. And also, before I made this video, I said, I'm just going to present the data. I'm not going to give any commentary. I'll let you make your own assumptions, and just here it is, no emotion, but like there's just too much going on here to not say anything. So anyway, I'm going to give my commentary like usual. Let's start off with the average sale price here. Here it is, the average sale price. I could literally just draw a line. Actually, I will draw a line here back to 2021. And of course, I've said this many times, we've been trending sideways for a while. But let's look at the year over year just for June here. So the year over year just for June really hasn't changed much. It's actually interesting to see in 2022, it was lower than it was in 2023. 2023 was 1.1% higher, and we've dropped 1.5% since last year, but very consistent. We've been trending sideways, like I've said. Looking at the new listings, lots of new listings, very in line with historical averages, actually. And looking at the year over year on the new listings, they're actually down. They've been down every year. 2022 saw the most new listings after that big initial crash we had when they started raising interest rates. But of course, it went down 12% in 2023, and then 2024 went down another 11.5% over last year. So new listings are down, but that doesn't translate into less months of inventory, which we'll get into shortly. Average days on market seems right in the middle there. But again, looking at the year over year for June, we're up from 17 in 2022, 24 last year, and now up to 30 days on market for the average house in these areas. That's a 25% increase over last year. Now we're into the average percent of last original list price. Of course, this is how much is a house selling for compared to what it was listed for. And you can see very in line with historical trends there. It's around 97% or something right now, maybe 98% depending on your city. Actually, here's the numbers here, 98.2%. Now, remember, June has a high average percent of last original list price because it is in the spring, peak spring seasons. You can see the last 2 years, 100% or just over 100% in 2022. Again, after that big market rundown or slowdown after that first interest rate hike, last year was just over 100%. But look at this year, down almost 2%. So that's a big drop from last year compared to this year. Now, this is where things start to get really interesting. So looking at the sales, you can see they are a little bit on the low side when you compare them to the last 5 years. And again, this is all months, but when we compare just June's here, so June is down 26% actually from last year, which is a big deal. Again, 2022 had less sales than it did last June. But again, this June is down over both years, 25% from last year, which is, again, huge. Moving on to the number of homes for sale. This is where, again, we're making new records when it comes to inventory. So we had just over 25,000 homes for sale on the MLS. Again, higher than any month in the last 5 years. Looking at the year over year, just for June, we're up 32% for total homes for sale on MLS in these areas compared to last year, which is a huge amount of inventory, again, compared to last year. Now we get into the months of supply. This is a true indicator of the market and the absorption that all these listings are having. So this is where things get totally insane. Looking at the 5-year chart here, it's at 5.2 months of inventory in these areas, higher than any month by far in the last 5 years. Let's expand this out now to show all the data all the way back to 2011. And you can see it's a 10-year high right now. You have to go back to September 2014 to see these levels of inventory, months of inventory. So months of inventory is skyrocketing. It is higher than any time in the last decade. Back in 2014, the market wasn't that good. The market was flat. They were trying to stimulate the economy still after the great financial crisis or the Great Recession, whatever they called it. And when you consider the rate at how quickly this inventory has increased, it's probably safe to say, you know, where we're headed with prices very soon if this keeps up. And I don't see it turning around because the problem is affordability is at an all-time low. People can't afford to get new mortgages. There's a very limited pool of buyers that can actually afford homes to buy. So this is not going to all of a sudden turn around. We are trending up. If you look at the chart, we're making the lower highs or higher lows and higher highs, like I always say. And lastly, when you look at the year over year for months of supply just for June, look at the rate we've increased every June since 2022. We've increased 48.6% over last June, which is a huge increase. That's an extra 1.7 months of inventory over last year. So again, we're seeing lots of new listings, but we're not seeing the sales. So the listings are sitting on the market longer, and which is contributing to this increased months of inventory. And I'm guessing this won't just be a regional trend. When the KREA stats, when the national stats come out mid-month, I'm guessing we're going to see a new high in months of inventory there also. And we're going to have the Toronto Real Estate Board releasing their data very shortly. I couldn't get it today. It wasn't ready. But again, we're going to see increased months of inventory. So this is going to be a national trend. We're going to see new highs in inventory, probably all-time highs for 5 to 7 years. I can't remember the exact numbers, but I look at them every month. But yeah, we'll keep an eye on this. But that's all for this week. Thanks for watching, and I'll see you next time.